Hey Vince, how you doing?
Good. How are you, Cass?
I'm good, thank you. So I've got you back again. I've been a little bit better about tagging you down from the previous recording to make sure we've got the next one recorded so we can get these out. So I appreciate you making the time today.
Let's do it.
Our topic of discussion today, this is one we have we deal with a lot of self-employed borrowers. So we see these questions a lot. And I think even when I'm talking to people have a lot of misconceptions about how lending works if you're self-employed and you have variable income, or even really what does it really mean to be self-employed in the eyes of a mortgage lender. So I think this is a great next topic to get out there so that we can demystify some of these things out there, answer some questions, and show what possibilities are out there for individuals who do earn income in this certain fashion.
Yeah, I would agree, Cass. I mean, I think the message out there is to tell people with variable income or people who are self-employed that it is possible to get financing at a reasonable cost as well. So it doesn't mean it has to be a crazy cost. It's actually very reasonable. So the message is that it is possible.
Exactly. And it's possible amongst many different lenders. I think one of the
Yes.
things that we hear about is like you can only get approved from like an alternative lender or get private lending, which is simply not true. There's many different ways we look at that, and we will get into that a little bit more. I've got some questions I want to throw at you that are just the common ones that we get. And we do touch on the types of lenders that we work with for this type of client. But I think we should start with the basics. So how would I even know that I am considered self-employed in the eyes of a lender?
Yeah. So in the eyes of a lender, I mean, it pretty much comes down to how you're paid or how you collect revenue, let's just say, and if you're deducted at source really for income taxes, CPP, and other source deductions. That's really the way it comes down to. So number one, we look at the type of person and how they're employed. So for example, someone who owns a business, pretty much business for self-employed. But then you've got professionals as well, doctors, lawyers, accountants that have professional corporations. You've got also small business owners, and then you've got also owners and directors of large corporations. Those are all included under the self-employed borrower group, and none of them have source deductions. So they, at the end of the day, will have a certain amount of revenue that comes in and that they're going to claim as revenue on their income taxes, and then have certain amount of deductions that they're going to be able to write off. So most people know them as write-offs that they'll be able to claim. And then we'll have a net income figure to work with. So that's very different than someone who works hourly or earns a salary, because they're going to have the amount that's deposited into their bank account will be net of all source deductions. So they essentially don't have control over most of those deductions, whereas someone who is self-employed does.
So I could technically work for a company and still be considered self-employed because perhaps I'm a commissioned salesperson who is not deducted at source. I'm just paid straight commission, and therefore my T4 slip would look a little bit different than somebody who is, say, on salary or hourly through a company where they are deducted income taxes and CPP and so on.
Good point. So someone who is paid a commission would not receive a regular T4. They'd receive a T4A, and they would receive that in terms of commissions. And then yes, they would decide how they want to write off that income or write down that income on their income taxes. They're also lumped into that a business for self or self-employed with variable income group. And someone who is also, for example, on contract. So they may not be earning commission, but they actually may be on contract. We see this with IT contractors, for example, right? Cass, you see an IT contractor who bills the company on an hourly basis for for their services. So they'll give them an invoice plus HST. They'll get paid that invoice by the company. And then, so it's not a commission basis, it's based on hourly work. But again, there are no source deductions. So they would, again, fall into this group.
Yeah, exactly. So we kind of started to touch on it there. We talking about T4As and talking about directors of companies, so on and so forth. So what documents would we need to have kind of earmarked for you that you would likely ask for if I am somebody that earns variable income?
Right. So right away, the documents that we'll always request from clients or borrowers who are potentially self-employed are going to be your most recent income taxes that you've filed. So those would be your T1 generals for the last 2 years. And then your notices of assessments that are corresponding with those T1 generals that you receive from the government once you've filed for those the same 2 years. So we'll definitely do that. If you are a director of a corporation, or if you own a corporation as someone who's self-employed, we'll also need the articles of incorporation. If you're not incorporated and you own a small business that's unincorporated, we're going to need the business registration or copy of the name registration that links the business to you personally. On top of that, we may ask for 6 months bank statements or up to 12 months of business bank statements to be able to see the cash flow coming in. So those are things that we'll need. Sometimes we'll also require the HST return, which is also something that is important to look at and adds to the validity of the business and tenure of the business. So these are some of the documents that we definitely need. In the case of someone who's incorporated, we'll also sometimes request the business financials for the last 2 years as well. So you can see there's a wide array of documents that we may need. And it will all depend on the type of business for self or self-employed borrower you are.
And how do you know what to ask of me if I've never met you before?
Well, I mean, during that initial call, when any of the agents have a call with someone who's a potential borrower, we'll go in and ask them how they earn their income. And right away from there, and that's pretty simple in terms of understanding, the dollars and cents of it. How do you earn it? How do you bill it? What type of business do you operate? Is it incorporated or not? Are your income taxes up to date? So we'll ask all these questions to then essentially be able to narrow it down and say, okay, I'm going to need your income taxes for the last 2 years. I'm going to need your business registration. And I'm going to need the 6 months bank statements and potentially some invoices from those bank statements as well. And I can basically package that off to you so that you'll be able to send us the information that we're going to need to be able to review your file.
You mentioned something interesting there. You ask if your tax filings are up to date.
Yes.
What if they're not?
So we work a lot, like all of our agents work a lot with the professionals that are linked to the client. So that in this case, it would be the accountant. And a lot of people who are self-employed, are busy in their day-to-day operations of their business, oftentimes defer that conversation with the professional. So we're able to liaise directly with them. Sometimes if those taxes are not up to date, we'll work with the accountant to get those up to date and ensure that we have the accurate information that we need. And sometimes there's a little bit of buffer that we can work with that maybe would say that not that they're not up to date, but they haven't yet been filed essentially. So they may be due, like right now we've got 2022s that are going to be having to be filed by June 15th for anyone who's a sole proprietor. So right now we can still technically be working with 2020 and 2021 tax filings for those borrowers, even though 2022 is long and gone, you see?
Mm-hmm.
So there's some buffer zones that we're able to work with. And we take advantage of that if we can, to make sure that the numbers can work out in the benefit of the borrower.
Okay, great. So my next question is about the types of lenders. So we started to talk about that a little bit and I kind of held you off, but if you're self-employed, is it possible to get lending through like a regular bank, say like a Scotiabank, TD Bank, kind of the big brands that you see all the time?
Yeah, absolutely. I mean, you could technically get a mortgage with 5% down if you're self-employed. So right away, we can remove that stigma of saying, if I'm self-employed, I can't. Now it's just a matter of how, right? And it comes down to a discussion of what program they're going to fall into. Do they claim enough income on the net? See, the difference is really for someone who's self-employed versus someone who's salaried, Cass, is it comes down to that net income figure, right? When we're qualifying someone who is salaried or salaried or hourly and deducted at source, and we'll go back to this thing about being deducted at source for income taxes and CPP and all that stuff. Really what comes down to is we're able to use the gross income for those borrowers. When it comes to someone who's self-employed, there's a disadvantage here. This is why there's that stigma of I can't, because I'm not able to use the gross income. I have to use the net income. Now, it doesn't mean I can only use that net income. There's some add backs and I can gross that number up, but oftentimes it does present a huge disadvantage for someone who's self-employed versus someone who's salaried and how we qualify that mortgage. In saying that, there are plenty of people who are self-employed who claim enough income to be able to qualify for 5% down, 10% down, 20% down with A lenders and or alternative lenders. So it just really depends on the client.
So let's talk about the alternative lending world a little bit. So if somebody doesn't claim enough income on their T1 generals, because they've written off quite a bit of their expenses, and that, to your point, that net number is a little bit smaller because we don't have the benefit of using the gross, we would turn to the alternative lending side. What types of things is an alternative lender looking at to qualify somebody's income on that side?
Yeah, so when we're going with the alternative route, we're really going to look at the meat and potatoes of that business, right? We're going to get into the bank statements. So you may say, hey, Vince, I earn, my business earns 250,000, and then your notice of assessment in T1 generals show that you write it down to 50,000, right? And so rather than getting into those documents, which would force us to qualify you based on 50,000 plus potentially a gross up, we can take your current business bank statements or your most recent for the last 6 months or potentially 12 months, and look at the total annual gross income that you're bringing in by annualizing all the deposits that are that basically are from revenue, and then reducing that total number by a certain amount of expenses that are reasonable. You know, for example, rent, IT costs, meals, travel, like all these things that you can put in that are reasonable, that makes sense. And then we're able to use a net number that is more in line with how what's the reality of how this business actually operates, its cash flow. So that might mean that instead of using a $50,000 of income, I might be able to use $120,000 of income.
Interesting.
And that lender, yeah, and that lender will be happy and able to use that number.
Okay, so the other misconception is the length of time. I hear everyone say, oh, I can't yet. I haven't had my business for more than 2 years yet. There's this thing about having your business for 2 years that everyone thinks is like a must. So tell us a little bit about how banks look at the health of your business over a certain period of time and how long they want to see that established history.
Right. So, I mean, I would say the blanket rule always applies, and you hear it. It's because it's linked to the main banks, the prime lenders will say, hey, I need a 2-year history.
Mm-hmm.
And so that would mean they would want ideally a 2 years of income taxes. Well, if I started my business, 2.5 years ago, I may not have my second year of income taxes filed yet. So in their eyes, it would not be possible, right? I mean, you would know this, Cass, and the whole team knows this. That couldn't be furthest from the truth. There's so many options that we can present a client who's even been in business for even less than 2 years. And that just may mean that they went from the same industry as an employee and then end up being a contractor. We see this with IT contractors.
Mm-hmm.
A lot of them will start off working for Microsoft or a larger IT firm, and then will eventually phase into a contractor and sign a contract with that same IT firm, but just
They're just being
essentially
paid differently.
they're just being paid differently, right? So there's a lot of common sense there. Or someone who was working as an electrician for a company for a long period of time, and then eventually decide to go on their own, right? So there's so many different scenarios where really there is that longevity in time and industry. We always ask that question, client, right? It's not necessarily how long have you been self-employed, it's how long have you been in this industry is just as equally as important. So we ask these questions to get a good idea of what mitigating factors can we use when we're underwriting or reviewing a file to be able to give solid probabilities and make it happen and make it possible for a client. So I mean, 2 years is a standard golden rule, and everybody says that because the banks say it. But at the end of the day, we can work with someone who's newly self-employed if they've been in that industry for a long time. If there's something, if they're new to that industry and they're newly self-employed, some as short as six to 12 months we can work with as well on the business for self, more of an alternative lender scenario, but still possible.
You mentioned down payment at the beginning, that some people can put down as low as 5% being self-employed.
Right.
Where is this thing coming from where everyone thinks as a self-employed person, you have to put 20% down?
Yeah, so the 20% down likely comes from just the more of the alternative scenario for people who are self-employed, and those borrowers traditionally would have had to put the 20% down and would then have to qualify with an alternative lender. There are cases, again, like I said, you can be self-employed and put 5% down if you qualify with the net income from your T1 generals and your notices of assessments. There are programs as well for you to be able to put 10% down, qualify with a bank, a prime lender, and use a stated income calculation to be able to state reasonable income and still get qualified. So there are options for self-employed with less than 20% down. It's just that most don't know about it. And yes, there's a little bit more work involved with making this work and making sure it's reasonable. But at the end of the day, it's still an option for them.
And the good news is about that, it's a lot more work, but it's not more work for them. It's more work for you and me.
Yeah, exactly. We're the one that put the elbow grease in, but you know what? It's fine. I mean, if it's doable, I mean, then it's doable. But if it's not, then it's really important to just let the client know that it's not doable, but this is doable, right? At the end of the day, that's why we love working with self-employed, because they just want to know straight, like, just tell me straight up, what is this possible? If it's not, what is possible? Or what do I need to do to get there? And what's it going to cost me? Because they're always searching for like just someone to tell it to them straight, right? Because they feel it's not possible. So I know that the team really does work hard to do that.
Yeah, and I find self-employed people, when I'm working with them, they're very open to opportunity, and they have the mindset of like, I'm the professional in my field, you're the professional in your field.
Yeah,
So
totally.
I'm going to come to you for advice, and you'll tell me what I need to know. And then if it's some work I need to do to get there, then I will do it. I'll position myself correctly. So yeah, they are fun to work with in that way. And there's just so many options with self-employed people. We're actually more limited with somebody who has a very fixed income, because they have to fall within like very black and white parameters. One of the other things I always mention to people when I'm talking to them casually about the options for self-employed people is the number of advantages that we actually have in this marketplace for self-employed people. Everyone thinks of it as a disadvantage because I can only use my net income, because I have to put 20% down, because they're hearing things that are untrue. And there's actually quite a few advantages. So why don't you fill us in on some of the advantages? We did touch on some of them. For example, being able to gross up income, or being able to use some additional income if we're looking at the actual cash flow of the business. But why don't you walk through some of those benefits that we have, especially the benefits when we are able to look at a wider variety of lenders?
Yeah, absolutely. I think the wider variety of lenders is a huge one. It just means that when you're self-employed, the alternative lenders are going to look at you from a different perspective. They're going to say, listen, someone who's self-employed doesn't necessarily have an income ceiling, right? And a lot of people are motivated, when they're self-employed, they're motivated by what they want to achieve. So they're going to maybe work harder, put more into it, invest more in their business to get more revenue if they know what end goal they're looking for, because they're motivated differently. And so that view of being able to have access to more lenders, have access to larger loan amounts, have access to more options for someone who is self-employed, meaning that even your qualification ratios can be stretched more when you're someone who is earning a variable income and non-deducted at source, they're self-employed. Lenders out there will look at it more from a common sense perspective than someone who is salaried and says, hey, the salary is this. And then, yeah, you can maybe earn a potential bonus, but that's not going to be relied upon. Whereas someone who has shown a 6 months track record in their bank statements of what they're earning, and then you annualize it, they're going to say, well, these are real dollars. We see them going into the account. So it's reasonable for us to assume. So I think a lot of the people, a lot of self-employed borrowers, why they feel discouraged is because they keep going to their bank asking for money and they keep being told no and turned away.
They're only looking at specific documents.
That's right. That's right. Well, they're limited, right? And so what's really important is kind of got to go back to the drawing board and say, okay, here are the documents that I have. What is possible with what I claim, what I earn, what I spend, and what I plan on achieving. Then at that point, you can really go back to the drawing board and put it together for that person, and carve out a plan.
Perfect. You had mentioned through talking, working with the accountant, and I think talking about the team that we work with is so important. We always talk about a team when we're talking about a client purchasing, because we're going to work closely with your realtor and your lawyer, and so on. It's a bit of a different team when we're working with someone self-employed. Yes, if they're purchasing, we're still going to have that relationship with the realtor and the lawyer, but we also bring in the accountant. So talk about how that relationship can affect the approval and what we're really looking to gain from that relationship and how that benefits the client.
Hugely. I mean, it's really important to have a solid accounting firm in your corner. And so for us to liaise with them to be able to get documents we need, i.e. financial statements that are up to date, or if you're in the middle of filing your financial statements, and there are some transactions that you're able to, put into the previous year, put into the next year. And if you know what you're going to need to pay income taxes on in order to achieve a certain debt load approval, it's always good to know and consult the experts at that point in time. So really, I tell people, during tax time, it's a really good time to connect your mortgage professional with your accountant if you're planning on borrowing in that year, because then you're able to plan accordingly. Oftentimes we'll collect documents and be involved in that conversation during that time of year with our self-employed borrowers and their accountants to be able to plan accordingly. On top of which, sometimes there's a taxation discussion to be had as well, right? So a lot of times, I'm self-employed, I can qualify for a mortgage with a prime lender, but then I'm going to have to claim all this money and pay all this income tax on this money. Okay. Or I can go to an alternative lender and claim a lot less on my income taxes, pay less income tax, and use my bank statements. Sure, the offset is I might pay a little bit extra in interest, but I'm going to tell you right now, the math almost all the time works better in your favor if you're going to go the alternative route rather than go the standard bank route, right? So the accountant is a huge piece of the puzzle that we enjoy working with. In fact, we have a lot of back and forth discussion with many accounting firms to help clients, and it's an important person, to have in your corner.
I always think too, you have all these professionals working for you, and there's certain elements of your big picture and all of your goals So you've got your financial planner working on like perhaps your retirement goals and your savings, your investments. You've got your accountant working on the goals of how you want to run your business. Then you've got your mortgage broker working for maybe those personal goals, building a real estate portfolio for rentals. So if we all have goals, but all the plans are different and don't align well, it can really foil these plans and it can just fall like a stack of dominoes. So it's important that if we're all working towards a common goal, we make sure that the plan leading to that goal really satisfies all parties in that transaction to make sure that the client's best interest is looked out for. Because an accountant might say, no, claim very little income, because then you're going to pay very small income tax. And the client goes, oh, that's great. You're looking out for me. I'm going to pay less income taxes. That's wonderful. And then we're having a discussion with the client where the client's saying, yeah, I only want to work with a prime lender and my taxes are almost finished being filed. I'll get those. And then we get them. And now the plan we had no longer fits. And then we're looking at alternative options, which are still great options. And there's lots of opportunity there. But if all these discussions can be happening simultaneously and be very transparent, then we can find a commonality that works for the client and gets them further ahead and a lot faster. There's a lot less back and forth.
Yeah, no, totally. That's why it's important to me as well. Bring people to the table, almost like a mini board of directors, right? Rather than rather than everyone operating in silos, you bring everyone to the table. Just because I feel like sometimes people who are self-employed will sort of almost marginalize their capabilities, and so they're not really pushing the envelope or expanding their horizons the way they should. And that's one recommendation we tell them all the time, right? Bring key people together around your table. Sometimes a 20-minute phone call with a couple of the professionals on your team can save you a lot of headache and a lot of money, right? So yeah, I agree with you 100% there, Cass.
Okay, good. That covers off all of the kind of misconceptions I usually get from clients or even just anyone I'm talking to in general about mortgages. Is there anything you want to add about how a person who has variable income should go forward and what their next steps should be, whether looking to buy or refinance?
I would say, don't limit yourself. I would say if you can afford it, why don't I put it this way? If you can afford it, you know what you can afford, right? Look at your cash flow, write it down, use a spreadsheet, go through a budget worksheet or cash flow worksheet. If you know you can afford it, there likely is a way for you to qualify. Now it's just a matter of finding the right people to give you that right advice. And it usually means not going to a bank, and that's okay ultimately. So what you want to do is source a professional that has access to the market. And that's going to be in your broker side of the business. So definitely what you're going to want to do is have your paperwork up to date, prepared, bring your team in for discussion. That means your accountant, your lawyer, and perhaps you have a business partner or whatever it is. Anyways, bring those people all together. And really, like I said, it comes down to affordability at the end of the day. When it comes to people who are self-employed, you know what you can afford, write it down, figure it out, and then find your team.
I think another thing that's great to mention is to be very transparent with us about how your business operates, the state of the business, any personal debts, if there's debts within the business that need to be covered, if we're saying the case of a refinance. It's better to tell us about it and be transparent so we can build that plan rather than say, oh, I just need to take some equity out. And then really you're going to pay maybe some property tax arrears, or you're going to pay some income tax arrears that is about to come up due. It's better to be transparent with us and help you build that plan because we're here to help, and we really want to see you get to the next step. And if that means cleaning up a few things, that's what we're here to help with. So that kind of goes for anyone. But there's always two elements when you're dealing with a business for self person. There's their personal finances, but also the finances of the business. So I just wanted to mention that it's really great if we're involved on those discussions and we are aware of what's going on so that we can help.
Yeah, no, absolutely. Transparency is a two-way street. So it's really important for us to be able to help and give clear advice to understand what the clear challenges are, the clear goals are from our clients. Absolutely.
Wonderful. That is everything I wanted to talk today about, Vince. I'm going to put this video up on YouTube. I also have some collateral sheets that if anybody would like some documentation to just sit and read to be better prepared about the next step of getting a pre-approval, always reach out to us for any resources that you require in the mortgage or financing world. And thank you for your time, Vince. On to the next.
Anytime. On to the next. You got it, Cass. Thanks so much.
Okay, bye.